So let's talk about the stronger than expected wartime economy. Welcome back to the show, my good friend, National Economic Council Director Kevin Hassett.
Mr. Kudlow.
Kevin, so, you know, maybe we've seen the peak in oil prices. I'm probably willing to make that bet. I'm not going to make you make a bet one way or the other on national TV. I'm sure you have your own opinion. But the fact of the matter is, if this war is over or very nearly over, if we have seen the peak in oil prices, the futures market, as you know, is still over $30 lower than the spot market, whether it's WTI or Brent. How bad is the impact going to be? Let's start with inflation. How bad is it going to be?
Well, first of all, there's a CPI number that's going to be coming out on Friday, and that will include the spike in energy prices that we just saw. But if you look at the Cleveland Fed, they're forecasting correctly, I believe, that's going to be the one-time thing, and we're going to go back to normal because, as you know, this kind of quick spike in oil prices doesn't lead to inflation. It's a level adjust that corrects itself almost immediately, which is what futures markets are saying. You know, one of the reasons why the spot price is so high, don't forget, is a lot of Asian economies took all of their oil, really, from the Straits. It's all kind of stuck in the Straits, and now they're scrambling to find oil to refine wherever they can find it, and so the spot price is really high, closing in on $150 a barrel for something delivered today. But that's going to dissipate really, really quickly, and you're right, that price is going to go down.
I mean, one thing, I don't want to get off in the weeds, but the money supply, the M2 money supply never did bulge during this period. It's been holding around 3 or 4% for the last couple of years. That tells me there's a lid on inflation. And what about gasoline prices? Okay, you get your one-time adjustment, let's say the March CPI, okay? Let's say it spills over even a wee bit into April. Gasoline prices can come on down pretty rapidly, can't they?
They can, and we've taken a number of measures, as you know, the kind of thing that you advocated when you were in my spot, that we released the strategic reserve.
Yes.
We coordinated with our allies to do so as well. We increased ethanol production in the summer. So we've done a lot to put downward pressure on oil prices and gasoline prices, the refined products. We waived the Jones Act so the refined products could go from the Gulf of America to the West Coast. We've taken a lot of steps, and now with hopefully the peace deal being finalized by JD over the weekend and the team, then things can get back to normal really relatively quickly. The final thing I want to say about this is that don't underestimate the power of the supply side of this economy to continue to push prices down and welfare and incomes and growth up. As you saw that we got the capital goods data this week, and it's actually orders and shipments of capital goods are the highest on record, the highest in history. But not only that, but something that Alan Greenspan taught me when I was a little kid at the Fed is that what you really want to see is those things skyrocketing while orders are higher than shipments, because that means future shipments are going to even be bigger, and that's what goes into GDP. And so right now, in addition, we found that 54,000 people are out there building new factories. We see that in the jobs data, and so we're at a supply side boom, which is one of the reasons why the economy has stayed so strong. I think that market participants and investors and corporations, they all tell me, I talk to CEOs as you did every day, that they got their eye on the horizon and they understand that this is a temporary disruption, and they're investing through it because they're really racing to beat the other guys for market share because the economy is doing so well.
You and I have been talking about this for so many years, 100% immediate expensing and depreciation.
Right at the end of the Punic War, I think it was. Right?
It was close to the end of the Punic War. I was in there climbing those mountains going after Hannibal. And now the other point is private jobs seem to be booming in March. Federal jobs continue to come down. I mean, private jobs for the month were up 186,000 or 185,000, whatever. Federal jobs since Trump came into office down about 375,000.
Right, almost 400.
The unemployment rate is 4.3%, for heaven's sakes. I mean, I got all these people. I got bank CEOs here in New York. I got defeatist Democrats in Washington. You got a 4.3% unemployment rate. That's a boom, for God's sake. America is working and building factories. And to your point, AI and productivity, I mean, gee willikers, let's try to be upbeat, not downbeat.
Right, and you know, one of the things that's lasting, don't forget, is that big, huge reduction in government employment is something that happened while we've had an employment boom. And that's a durable thing that's going to cut the deficit and make it easier to lower taxes in the future and so on. And so people told us that if we reduced government spending or the amount on government workers, if we secured our borders, that we wouldn't have enough labor to make the economy boom. But what we found is that that Americans have increased their labor force participation as wages have gone up, as we predicted, and the government workers are getting good jobs in the private sector. It turns out that government workers are really talented people, and that when they're separated from government work, then you just look at the jobs data in the D.C. area, the private sector there is booming, and a lot of those jobs are being taken by government workers who are getting better benefits, better wages, and so on. And so the idea that cutting government workers and securing the border was going to harm the economy has been proven false, as have just about every other assertion of the naysayers.
That's a very interesting point, by the way. It's the same workers in the same neighborhood. They just cross the aisle to the private sector, and look how productive they are. How wonderful. Right. White House National Economic Council Director, my good friend Kevin Hassett. Thank you, Kevin. Appreciate it very much.